Okay, so a very good morning to everybody in this room. This is Fahim Ansari, your lead instructor for UCDP, and with me is your mentor Swapnil. So today is 7th of May 2020, and we are into the Certified Trading Professional session number 11. So today we are going to enter types and exit rules. Okay, so before starting, have you all seen the yesterday's session and also then the recording? How many of you have not seen the yesterday's session? Odds and answers and trends actually. Not seen Sandeep. Okay. Seen so many. Only Sandeep has not seen. The rest all have seen. That's good. That's very good. That's very good. Okay. Sandeep, as I told you, be serious and start looking at the sessions because otherwise it will be very easy when I do it. It will be difficult when you start doing that. It's really necessary that you go and look at the session once. Okay, so yesterday we started with odds and answers. So odds and answers is nothing but it's a numbering system through which we score our zone, through which we quantify our zones. So the more the odds and answers, the better is the setup, better is the probability that the zone might work in our favor. So we have three odds and answers, zone structure odds and answer. First is freshness. So if the price has left the zone, the freshness is the price has left the zone, but the prices never ever came back to the zone. Okay, so if the zone is set fresh, we give the score of 3. If the zone is tested once, we give it a score of 1.5. And if the zone is tested multiple number of times, then we give it a score of 0. Okay, so that was freshness. Then comes strength. When I talk about strength, your focus should be on how did price leave the zone. So if the price has left the zone with a gap, or two consecutive red candles for two consecutive red leg candles for your supply zones, or two consecutive green red leg candles for your demand zone, then we give a score of 2, not 3, the chakrapani. 3 is only for freshness. Okay, if the price has left the zone with only one leg candle, then we give it a score of green leg candle for your demand zone and red leg candle for your supply zone. We give a score of 1. And the body, okay, if the body is, if the body is more than 50% penetrated or submerged in the zone, then we give it a score of 0. Yeah, not leg candle. The body should be 50%. Okay, not the leg candle. The body 50%. Body of the leg candle. So there is some question by. Let me go up in TT for freshness. Also the max. Why are you going for the TT? Did I tell you to go for the TT, Pradeep? Don't go with that TT. What is available in the TT? Don't go with that. That's the wrong thing, and that's for an advanced course. Okay. Uh, One doubt when to see the freshness and when to see the seventh candle. Can it be the same first? See, freshness is something different and seventh candle is something different. Why are you mixing both the things? Seventh candle is for your candle, for your trend, and freshness is an odds and answer. Curve analysis, no, that's not curve analysis. if a leg candle opens with a gap, even if one only, it's two. Yeah, even if it's a base candle and it's open with a gap down or gap up, then its score will be 2. Yeah, we have not done curve yet. Okay. Then we came with the time. So when I talk about time, your focus should shift on the basing candles, the base candles between the leg in and the leg out. So if there are 1, 2, 3 base candles, 1, 2, 3, okay, then it's a then it then it's a the score is 2. If there are 4 to 6 candles in between the base, then the score is 1. And if there is if there are more than 6 candles, then the score is 0. So these are the odds and answers that we did. Okay. Then comes we did trend. Okay, so trend will, and also remember that your odds and answers will be scored only on the lower time frame, not on the curve or the intermediate time frame. Okay, your odds and answers will always be scored on the lower time frame. Okay, then come we did trend. So trend is the price movement of the general price movement of the lower part of the zone. No, there's nothing like lower part to zone. Ashu. One doubt, if I'm marking the zones on 71, if the strength then for the same is best value. First, we will look at the 125-minute chart, then only we will have a look at the 75-minute chart. Okay. So first, you have to look at the 125-minute chart only. Now, if you are aggressive, if you want to go for a 75, see, the lower you go, the more aggressive the trade becomes. If you the 15 minutes, the 5-minute demand zone is more aggressive than a 15-minute demand zone. So early income trade style is generally it is more aggressive.
Ziba?
Okay, it's aggressive. So the lower you go, the more aggressive the the zone becomes. When a leg candle when a leg candle body is having a gap from the base, but the wicks are cutting through, then it's not it will not be considered as a gap because the gap has been closed then. There is the screen is for your Excel sheet. Okay, you will see you will be seeing April May 20 CTP schedule. Okay, because if I go with the slides, I thought it will take a lot of time. So I just revise. Okay, revision is always done like that, not with the slides. Okay, so when we went on with the what we need to do, trend will always be seen on the intermediate time frame, and how to look at the trend, how to assess the trend of the stock is first you need a 50 SMA on your chart on an intermediate time frame. Then you count the 7 candle from the current market price or from the current candle, even if the candle is not yet formed. The candle is forming, so you count 1, 2, 3, 4, 5, 6, 7. On the 7th candle, what you do is uh, you can just place your vertical line on the 7th candle. Okay, on the 7th candle, and then on the intersection of the 50 period simple moving average and the vertical line, you have to draw a horizontal line. Okay, then you divide into a clock like structure. 12 o'clock hand, 3 o'clock hand, and 6 o'clock hand. Yes, you're right, Chakrapani. So then 12 o'clock hand, 3 o'clock hand, and 6 o'clock hand. So the very two most important thing that you need to look for in your trend is the slope of the moving average, and the slope of the moving average and the color of the moving average at the tip. So the slope is falling between 12 and 3 and the color of the moving average is green, then the trend is up. It's an uptrend. If the slope of the moving average is between 3 and 6 and the the color is red, then it's a downtrend. If the slope of the moving average is flat at 3, whether the color is green or red, it has to be a sideways trend. Okay, it has to be a sideways trend. If the color of the moving average is green and it's between 3 and 6, then the trend is indecisive. Similarly, if the color of the moving average is red in color and it's between 12 and 3, then the trend is indecisive. Yes, indecisive. I had shown you that, Chakrapani. Shown you that in the session. Somebody had asked this question and I gave the answer, and it's indecisive. Okay, so this was what we covered yesterday. This was what we covered yesterday. So let us now let's have a look at entry types and exit rules. You'll come to know when we do curve tomorrow. Okay, there is a connection between odds and answers, trend, zones, okay, entry types, everything is connected. So today, these are all jigsaw puzzles which you will connect tomorrow. So it's better you have a good breakfast tomorrow, okay, and pay full attention. Otherwise, it will go above your head. Everybody, not only to Kavita, for everybody. So today you're going to learn entry types and exit strategies. Thank you, my pleasure, Rutuja. So today we will learn how to enter into stocks and how many types of entries are there in uh, in Ignite, and also once we've entered, what are the options for exit? How to exit that stock? Okay, today I will tell you what is the rule of placing a stop loss, and also you might have seen there is a daily idea at my on my whenever I open a stock or whenever I open a script on a chart, there's a daily idea tool. So what is the meaning of daily idea? I'll tell you that. Okay. Yeah. Do we take trade or not if trend is indecisive? No. No. We will have a combination of trend, zones, odds and answers and everything tomorrow when I do the curve. So tomorrow you will see how to take a trade, but remember that when the trend is indecisive, we just skip the trade. Okay, so entry types. So our core strategy include three basic entry types used for both long and short positions. So in Ignite, we have three entry types, whether we go long or short. Okay, so the entry type now will be depicted over here. Proximal entry. So proximal entry, now there's an asterisk over here. Proximal entries are often referred to as limit entries since they use limit orders. Now, limit orders are not when see you will have a detailed about how to put your orders and everything. What are limit order, what is market order, and what are different types of orders. After the lockdown, they will have you will have a session with your mentor. Okay. So I'll just tell you what is exactly a limit order in short. So in a limit order where you specify a limit, when you specify a price where you want to buy or sell that stock. Okay, like if the stock is right now playing at 105 and you want to buy at 100, you specify a price that I want to buy this stock at 100. So that's the limit, that's the price that you are specifying. Okay, so that is your limit orders. First proximal entries were called as limits only. Okay, but now this is changed to proximal entry. So the as the name suggests, proximal entry, the entry will be taken just at the proximal line for a demand zone or just above the proximal line, and in the supply zone it will be taken at the proximal line or just below the proximal line in a supply zone. Okay, now limit orders, I have told you there is something called as market orders also. So market orders is at whatever price that is available in the market. Okay, you may see a price flashing on the screen 100, but when you go to when you put a market order, it might happen that you might not get a fill at 100, you might get a fill at 100.5. Okay, so you can get at the best price, you can also get filled at 99.5 also, because at that moment of time if the price slips to 99.5, you will get a fill at 99.5. But in a limit order, you will you will get entry if you put a limit order and you've specified that I want to buy this stock at 100. So either it will be 100 or a better price, means lower than the 100, above 100. Your your uh, your entry will take place at 100 or just below 100. It will not go beyond 100. Okay, so that's your proximal entry, where you take your entry at the proximal line or just below or above the proximal line in case of a demand or supply zone. All the trades we apply, that is buy or sell stop loss applicable only for T or can we be this and this. When I do bracket order, I will tell you that. Okay. Now let's go for the second type of entry, zone entry. So zone entry is the zone as the entry is specified. Okay, as the name specifies, zone entry. Your entry will not be taken at the proximal line, but in the zone, anywhere inside the zone. Okay, anywhere inside the zone, anywhere inside the zone. That's your entry type 2. And this is just a summary. We are going to do this in detail in the coming slide. The third is your confirmation entry. So in a confirmation entry, you are taking your entries at the proximal, but remember, you are not taking the entry when the price is entering the zone, but you are taking an entry when the price is leaving the zone. Okay, when the price goes inside the zone and then it's leaving the zone, then you take your entry. In a proximal entry, you take your entry at the proximal line when the price is entering the zone. And in the confirmation entry, you are taking an entry when the price is leaving the zone. Okay, so these are all the three types of entry that we have. Now let's do this all in detail. So proximal entry is also called as a type 1 entry. Okay, remember, proximal entry and type 1 entry are synonyms. So proximal entry is also called as a type 1 entry. A sell limit order is placed before price reaches the proximal line. So a sell limit order is placed before price reaches the proximal line with a buy stop order just above the distal line. So in case of a supply zone, your stop order will go just above the distal line. How much above this distal line? I'm going to show you that. Hold on for that. Okay, so a sell limit order is placed before price reaches the proximal line. So before the price reaches the proximal line, you have to place your limit order with a buy stop order just above the distal line. How much above? I will tell you. So this is your rally based drop. This was the selling footprint of the institution. So before the price came here, I just put my entry just at the proximal line or just below the proximal line in case of your proximal entry. Similarly, for your buying order or for your buy proximal entry, a buy limit order is placed before price reaches the proximal line with a sell stop order just below the distal line. So in case of a demand zone, your stop loss will come below the distal line. And in case of a supply zone, it will be coming above the distal line. Now, how much above, how much below, I'm going to tell you today itself. Okay, so this is your proximal entry where you take entry at the proximal line or just above the proximal line for your for your for your for your buying and for your selling. You take your entry at your proximal line or just below the proximal line in case of supply zone. It's just a stop order. It's just a stop order. That's it. Okay, it's just a stop loss that you put. Zone entry. The entry, any problems in the any doubts in the first type of entry or type 1 proximal entry? What about the others? So what is your problem, Amit? Not thoroughly means what is your doubt? For limit order, consider reference of proximal line, and for stop loss, consider reference of distal line. Yes. Risky trade. Why will a trade will always contain risk? When you come to market, forget it that it will not be a risk. It will always contain that risk. See, there are 81 students in the room, but I'm not getting a positive answer from. You have to put your order before the price comes to those knowledge. That's only what you can do. Okay. So second is your type 2 entry, and second is your type 2 entry or a zone entry. Okay. In a zone entry, a sell limit or market order is placed when price is anywhere inside the supply zone. Okay, so a zone entry is taken anywhere inside the zone. You can take anywhere between this proximal and this distal line. You can take anywhere inside the zone. Now, if you want to be very precise, then you can take your trade or you can put your entry 50% inside the zone. Okay, 50% inside the zone to be mechanical. Okay, to be mechanical, you can put your entry 50% inside the zone. So if the zone is from 100 to 105, you can put your entry at 2.5. Now that does not mean that you go and look at the scale, you bring a scale and look at that and put entry exactly in the middle. It can be just visible to naked eyes where is the middle of the zone and you can put your entry. Okay, so sell limit or market order. So market order. So let's suppose that you did not put your entry 50% inside the zone. You wanted to put the entry when the price comes into the zone. So when the price comes into the zone, you can just put a market. So at whatever price that is available, you will get your entry. Okay, a sell limit or market order is placed when price is anywhere inside the supply zone. Okay, so a sell limit or market order is placed when price is anywhere inside the supply zone. So anywhere inside the supply zone, or to be precise, 50% inside the zone. Similarly, a buy limit or market order is placed when price is anywhere inside the demand zone. So anywhere inside the demand zone, you can place a buy order. You have to time is mechanical. I didn't get your question. See, mechanical is when you put your entry 50% inside the zone. Yes. If you put your entry at 100, If you put your entry 100, the price, when the price comes at 100, it will be bought or a better price, maybe 99.90, but not at 100.10. Yes, for to be mechanical, you can put your entry before price crosses the proximal line. Now, if you want to put when the price comes inside the zone, then you have to be in front of your PC. So that's the problem. Okay, what you can do is you can put anywhere inside the zone. 50% you can put entry inside the zone. So that then you need not to be in front of the PC. It's just a stop order. Elango, it's just a stop order. It's just a stop order. As I told you that different types of order will be covered when your mentor takes your session. Okay, so that will be explained when your mentor takes your order type. So it's just for the time being, just remember it's a stop order. It's a stop order. Somebody else also asked this question. So it's a stop order. Limit order is where you specify a limit to buy. If the price is 105 and you want to buy at 100, you specify a limit. I want to buy at 100. Okay. So can you tell me between these two entries, type 1 and type 2, that is proximal and zonal entry, what are the advantages and disadvantages? For first part, tell me the advantage. Thank you, Vishal. Vishal, today Swapnil is not with us. Vishal is with us. So Vishal is also a mentor. And whatever he says, just listen to him also. Type 2 is a low risk entry. Very good. Very good. Yes, with a type 2, we can also miss the opportunity. Type 2 has a higher reward. Yes. Better profit. Yes. Proximal entry, no, Amit. In a zonal entry, there will be high profit. Not a proximal entry. Yeah, risk will be more at the proximal entry. That is a disadvantage. Okay, so the advantage of proximal entry is that you will get all your trades filled. Okay, that is mostly if the price comes to the line, you will get a fill. Yeah, so Madhuri, that's one of the disadvantage of the type 2 entry. Okay, but the disadvantage of type 1 entry is that the risk is more. Okay, the risk is more. Now, when I come to entry type 2, the risk is the lowest of all the entry types, whether it's a limit entry, whether it's a proximal entry, whether it's a zone entry, whether it's a confirmation entry, the risk is less because we are taking the entry inside the zone. So the risk is less. But the disadvantage is that you miss your entry because the price might just hit the proximal line and then it might move up or down with respect to your demand zone and supply zone. We can rearrange the price entry after the script enters proximal line. So once you have got your entry, why will you rearrange? Once already you are into that trade. And we can rearrange the price entry if the script enters proximal line. So if this price hit the proximal line and you're putting the trade in for entry type 2, it might happen that the price might hit the proximal line and then move up. It might not come inside the zone. Okay, there is no guarantee that while the price is coming and hitting your proximal line, it will come inside the zone. It might hit the proximal line and then move up. Okay, so this is your zone entry. And let's see what is your confirmation entry. Okay, so your confirmation entry is also called as a type 3 entry. Confirmation entry is also called as a type 3 entry. So when price rallies into a supply zone, for your supply zone, when price rallies into a supply zone, reverses and crosses below the proximal line, that is where you sell short. Now one thing over here is that remember in a confirmation entry, we will wait for one candle to close inside the zone. Okay, one candle should be closing inside the zone. And the next candle or after one candle closes inside the zone, maybe the next candle or maybe after four candles, you might get the price to cross below this distance lines. That is where you will take the trade. So necessary is compulsion is one candle should close inside the zone and the second or the third or the fourth or the fifth or the sixth should be leaving the zone. Because what could happen is once the price enters the zone, it closes inside the zone, there might be some base candle over here, which will not cross the zone, which will not cross the proximal line. So it's necessary one candle should be closing inside the zone and the subsequent candle or after one candle closes, the third, fourth, fifth, sixth, any candle should be leaving the zone. That is where will you sell short. Now in this type of entry, what happens that you are getting some confirmation. Once the price closes inside the zone and then the price starts to come down. So you are getting some confirmation that yes, now sellers are getting into picture. Okay, and the price might come down. So this is your confirmation entry. Yes, just to bring in kind of surety of price. Okay. Now similarly, in case of a demand zone, when price drops into the demand zone and reverses. So when price drops into the demand zone, one of the candles closes inside the demand zone and the second or the third or the fourth or the fifth is leaving the zone. That is where you take your confirmation entry. So again, we are getting some confirmation that yes, once the close of this red candle, if there are green candles forming in the zone, we get a confirmation of yes, that the buyers now are coming into the picture from a demand zone and the pending orders are now being executed and now the prices might go up. Okay. So this is a type, this is like confirmation. Yes, the buyers are coming here. Yes, the sellers are coming here. No. There is no. The risk is same as the proximal entry because you are taking an entry at the proximal line. The risk is same as the proximal entry. Okay. If price is not closed inside, but after touching the zone, the same candle comes out, then also no. Jyotsna, there is necessity that candle close inside the zone. Probability of execution is, yeah, it could be high. Probability means what is high? Probability of rewards, no, nothing like that. What could happen is this candle goes outside the zone and the second candle could also come inside the zone and stop you out. Okay. Formations of red base candles in supply zone and green base candles demand zone is a must. Nothing like that. One candle should close inside the zone, that is necessary. Now whether there is a base candle or not, the candle should be leaving the zone. Please show where we would put the entry price in at the proximal line. At the proximal line. At the proximal line. Yeah, once after the candle closes inside the zone, there could be a series of basic candle inside the zone. Okay, there may be 1, 2, 3, 4 candle just inside the zone, and the fifth may be leaving out of the zone. So, what will be the advantages and disadvantages of this confirmation entry? First, tell me the advantage. Very good. So, the disadvantage here is that you need to look. You have to be constantly in front of the PC to monitor whether the candle is closing inside the zone. Okay, so this is you have to be glued to in front of your PC. Okay, you have to be sitting in front of the PC to take such types of entry, the confirmation entry. Okay, so say simple. It's very simple. Why is it? What is that is confusing you? See, you can create an alert, but the price might go up in a flash. There is nothing like best type of entry. Whatever suits you. Like some people will be. See, I'm always whenever I take a trade, my entry is always a type 1 entry, because type 1 or type 2 sometimes. I don't have that patience or that much of time to wait in front of the PC to see my candle close inside the zone and then coming out. So I don't have that patience. I have the patience for my trade work, but I don't have patience to sit in front of the PC and see this candle closing inside the zone. Okay. So that's up to you. Or somebody will be very very conservative. He wants to have some more confirmation. So he will wait for the candle to close inside the zone. Or somebody will be, it's okay if I miss the trade, but I want a higher profit. So he might go with a type 2 entry. You can put any type of entry in any style of trading, Raj Krishna. The risk will be, yeah, you can say that. You can say that. Okay, what if the zone is violated and price is returning to proximal line? If the zone is violated, that's violated. I don't recommend anything, but if you want to ask me, I follow type 1 entry or a proximal entry. Okay. See, once the price breaks your distal line, then the zone has been broken. Okay, so then you don't take an entry if you have not taken an entry. If you are into the entry and if the price breaks this the distal line and then reverses, you are in the entry. If it's not as hits the stop loss, then just be in the trade. Okay, so this is a comparison between the entry types. Advantage is you are getting more confirmation when the price is just coming out of the zone. Okay, you know that the now yes, the buyers are coming in the picture. Now, can you please explain the advantage we get? It's simple, you know. When the price is leaving the zone, you get more of confirmation that yes, now the buyers are coming into picture. The second advantage here, you can see that if you take a proximal entry, you are filled over here. And if the price just doesn't close inside the zone, comes down and hits your stop loss order, you are out of the trade. You have taken a loss in the trade. But if you're waiting for confirmation, you are waiting for the candle to close inside the zone. Before the candle closing inside the zone, you are not taking a trade. So you are safe in such a scenario. Yes, I'm coming to that point. You can put a limit price also. No problem. For type 1 and 2, you can place the order and wait. Yes, you have to wait for the candle to close inside this zone to take an entry. Closing inside the zone. Closing inside the zone. Closing and wick is something different. Wick will show you the low. If the wick is inside the zone, but the closing is outside the zone, that is not called as closing. Okay, somebody asked that the price might just come here, dip into this zone, and then come out. Okay, so then that entry type 3 is not triggered. Okay, so let us do the advantages and disadvantages, and then we will see. Then we will see on a growing candle, limit price may not work. It can work. You have to be fast. Okay. Thank you, Arun. So let us look at advantages and disadvantages of each type of entry. So in a type 1 entry, probability of meeting entry is the highest because you're taking an entry at the proximal line. Set and forget strategy on most platforms. So you can just put your, when I teach bracket order, you'll come to know you can just put your entry, stop loss and target at once and just forget it in a type 1 or a proximal entry. The disadvantage is higher risk than zone entry. It's a higher risk than zonal entry, because in a zone entry, we are taking a trade or we are taking an entry inside the zone, not at the proximal line. So that's why the disadvantage is the risk is more in your type 1 entry. Lower reward than zone entry because the risk is more. Greatest unknown increases chance of stopping out. So you put a set and forget it trade. Let's suppose that I am going to office tomorrow. In the night, I analyze a trade. I put my stop loss entry and target. Okay, for a buy trade, for a long trade. Now what happened that there might be some news and the markets might be gapping 200 points down. Okay, so if the market gaps 200 points down, then I may be stopped out. It might just gap down below my supplies, below my demand zone. So I will be stopped out. So bracket order you can place right now, but we will not talk about bracket order. Aniruddha, we will talk about bracket orders when I come to the bracket order session. But yes, you can do that. There may be a chance that stop loss not triggered and we can have much loss. Stop loss is always a market order. Stopped out means you took a trade, but the price went below your below the risk, below your risk, what you could hold. Then you stop. That's a stop loss. Stopped out. That means stopped out. You are out of the trade for a loss. Stop loss will be triggered. Let's suppose your stop loss is 100 and your price gaps down at 99 point, or let's suppose at 99. So 99 you will be filled. Yeah, there could be a possibility of a greater loss, but you will be stopped out. No. In type 1 and type 2, we don't look at the closing of the price. In the type 1, we look at we take an entry at the proximal line, not inside the zone. Similarly, in a type 2, we take an entry anywhere inside the zone. To be precise, 50%. Now, we don't look here at the closing of the candle. Harish, if you're taking type 1 entry or type 2 entry, that will be counted, but type 3 entry will not be counted in that. Okay. See, stopping out means the price going beyond your entry price. That's it, beyond your distal line, and you are getting the price hits your stop loss. That means you are stopped out in the trade. That's your stop loss that we have done in the previous sessions. I will tell you what is the limit to put your stop loss. If you put a bracket order, Venkatesh, it will automatically put out you will be out of the trade. Okay, so let's go here and see what are advantages and disadvantages of your zone entry. So zone entry risk is lowest of entry types because you're taking a trade inside the zone. Reward is the greatest of entry types. Okay, reward is the greatest of entry types because again, the same thing, we are taking entry inside the zone. Probability of meeting entry higher than type 3 entry, because in a type 3 entry, you are waiting for one candle to close inside the zone. Okay, the candle may not close inside the zone. So it might just come inside the zone and then move out. So then your type 2 entry is triggered, but the type 3 is not triggered. So lower probability of meeting entry. It's a lower probability of meeting entry because the price could just turn from the proximal line. Okay, so that's your disadvantages. Risk is same as limit entry. So in the confirmation entry, let's look at the advantages and disadvantage. Risk is same as limit entry because you are taking an entry at the proximal line. Okay, you are taking an entry at the proximal line. Reward is same as limit entry. Okay. Reward is same as limit entry. So reward is same as limit entry because you're taking an entry at your proximal line. less chances of stopping out. Because what could happen is, you in a proximal entry, you take an entry at the proximal line. So the price might hit the proximal line, you get your entry, and the price might start to come down. Okay, limit entry is proximal entry only. That's specified in the proximal entry itself. Okay, so if the price hits the proximal line, it might start to come down, 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 and it might hit your stop loss. So in this case, you are stopped out. But for a confirmation, if you're taking a confirmation entry instead of a proximal entry, you are waiting for one candle to close inside the zone. So unless the one candle close inside the zone, you are not going to take an entry. So for a proximal entry, those who are taking proximal entry, once the price hit the proximal entry, you are into the trade. But same is not true for the confirmation entry. He's waiting for the confirmation, or he's waiting for one candle to close inside the zone. So same candle in which you have got entry, what could happen is it could come down and hit the stop loss. So in this way, a type 3 entry guy or a confirmation entry guy is saved. Yes, you can put an entry anywhere inside the zone, Milan. So that could be a set and forget it entry. Now, disadvantages: lowest probability of meeting entry, lowest probability of meeting entry, and non-automated entry on most platform. For this, you have to wait for the candle to close inside the zone, so you have to be in front of the PC. Limit entry, proximal entry, type 1 entry are all the same thing. Before we used to call as a limit entry, but now this is a proximal entry. Okay. Now, when to take a proximal entry, or when to take a confirmation entry or a zonal entry. So remember something, that the odds and answer score is 7. So remember, when the odds and answer score is 7 for a zone, you can take a proximal entry. When the odds and answer score is 7, you can take a proximal entry. But when the odds and answer score is 6, you can take a you cannot take a type 1 or a proximal entry. Then you can take a type 2, that is zone entry, or your confirmation entry. Okay, when the score is 6, you can take any type of entry, that is either a confirmation entry or a zonal entry, depending on your risk appetite. Okay, or depending on which entry that suits you. Okay, so that's your advantages and disadvantages. Exit we will do after the break. So let us do some here. What was the homework that I gave you yesterday? NTPC, 15 minutes. No, not Maruti, NTPC. So NTPC, what's the trend on the 75 minutes? What is the trend on the 75 minutes? Down, right? So if I'm analyzing my trade on a 75 minutes, what type of trade I'm trying to take, or what style of trading I'm trying to take? Trend is clearly down. Yesterday only it was down. I'm just hiding it. Yeah, it's a daily income trade. Okay, it's daily income trade. And where will be I marking my zones? Then 15 minutes. Okay, 15 minutes. Your trading view, the free version doesn't allow. If you use a paid version, then you will be able to plot it. Okay, so I'm taking a daily income trade on NTPC, and 15 minutes is the zone. So now, Okay, this was my price yesterday. Okay, this was my price yesterday. Okay, this is where the price closed. Okay, somewhere around close is 94.70. So from this price, I have to start looking at my demand zone. So I'll go down, 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 down. There was an explosive move here to the upside. But what is the problem with this zone? If I mark this as my zone, the zone is tested. Okay, over here it is tested. So I have to mark my demand zone below this. Okay, coming on over here, here. Can you see this as a gap up? There's a clear gap between this and this price. Okay, there's a gap over here. So that's your, this is not your base candle, but this becomes your leg candle. And this becomes your drop, base, rally. Okay, drop, base, rally. Okay, so now you'll mark your zone like this. Okay, if you're marking wick to wick, then it will be at the wick to wick. This is how I mark my zone with the proximal entry, with the second type of, the second way of marking the proximal line. So I'll go to the right hand side, see if this is fresh. Yes, this is fresh. It's a fresh zone. It's a fresh zone. Okay, so this is your demand zone. Now let's suppose that I'm taking a proximal entry. How is the risk more in proximal entry? And I'll show you that. So let's suppose that I'm taking an entry somewhere over here, the proximal entry. Use plus minus on your keyboard, Vinod. Okay, or the scroll button on your mouse. And stop loss. So I was talking about the stop loss. So always remember that for your, first of all, let me explain you what is daily ATR. Okay, what is daily ATR? So can you see here a tool, daily ATR tool over here? So daily ATR, it's written 4.53. Daily ATR, it's written here 4.53. So what is the meaning of daily ATR? Daily ATR full form is daily average true range. Daily average true range. So that specifies a range of the stock. Okay. Now let us suppose, I'll give you an example. Let us suppose that there is a stock called as ABC. ABC and its daily ATR is 5 rupees. Okay, its daily ATR is 5 rupees. And it opens at 100 tomorrow. Okay, so what is the meaning of this? That if the daily ATR is 5 rupees, if the daily ATR is 5 rupees, when the stocks opens tomorrow at 100, the stock will either move to 105, the range, the daily range, it will not go beyond 105, or it will move downside 5 rupees to 95. Okay, 105 or 95. So the above limit is 105, the lower limit is 95, or it can be within that range from 105 to 95. Generally, apart if the stock has a lot of volatility, if there is a result, if there is earning, if there is some news, or if the Nifty is heavily down or up by let's say 200, 300 points, then it could go beyond the TR. Okay, then it can go beyond daily ATR. But here, if the stock here is, let's suppose this is the daily ATR of NTR is NTPC is 4 point, let's take an round number 4.5. Okay, so it has opened over here, right? It has opened over here somewhere around 94.15. Okay, 94.15. Now 4.5. So either it will move 4.5 to the upside or it will move 4.5 to the downside. So let us do this calculation. I'll add 94 98.15 plus 4.5, which is equal to 98.65. So 98.65. So either it will move up till here, or I'll just subtract this value. $94.15 minus 4.5, 89.65. So 89 point, that's the stop loss value here. Okay, somewhere over here. 89.65. Okay. So either it will move till here in a day, or it will move to the downside, or it will be within this range. Okay, it will be within this range. No, nothing in percentile, not percent. It's 4.53. Okay, so have you understood what is the daily ADR? That is the average price movement for that stock in a day. Okay, and it will not change frequently. Like, it will not happen that 4.53 today is 4.53, tomorrow it will be 5.53, and the day after tomorrow it will be 3.53. Yes, from your opening price. From your opening price. In the study tool, right click, go to study. Where is study? Go to study, add study. Same where you get your moving average from and the basing candle indicator from. Go here. I think the 10th option is daily ATR. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah. The 10th option is your daily ATR. Press daily ATR and press apply. Okay. So you will get here. So press study, press D, you will get directly the daily ATR, press apply. Yeah, it's the previous day, Alan. It's 14 days. The 14 it's written over here, right? So this is for 14 days. It's 94.15. I have not taken, I have just put a entry at, this is closing price. This is the opening price of the stock. 94.15. Hold on, Deepak. First understand what is a daily ATR. Have you understood it so that I can just tell? Daily ATR is in price term. Yeah, it is by default 14 days. Okay, now this daily ATR, this is your daily ATR. Now there is something called as 2% and 10%. 2% and 10%. So this will help you in your stop loss. Okay, this will help you in your stop loss. Now I'm just deleting this line. Once you have understood it, I'm just deleting this line. So remember that whenever daily ADR is different for moving average 50 period. So it has no relation with 50 period moving average. The daily ATR for each time frame will be different, but we are using a daily ATR. That is a daily average price movement. Okay, the daily ATR for different time frame will be different, but we are using a daily ATR of daily chart. We are using the ATR of daily chart. That's why it's DATR. Okay, so daily ATR. Now remember that whenever you are taking an hourly income trade or daily income trade, hourly income trade or daily income trade, your stop loss will be 2% of daily ATR. Written here, 2% of daily ATR, 2% of daily ATR. And when you are taking a monthly income trade or a weekly income trade, it has to be 10% of daily ATR. Okay, it has to be 10% of your daily ATR. Now, what is the meaning of 2% and 10%? How will be using this to our advantage? So the stop loss line here will be, what is distal line? 89.75, right? The distal line here is 89.75. So what I will do is I will add or I will subtract in the demand zone. What I'll do is I will subtract this value 0.09 from this value 89.75. So 89.75 minus, or we will just take 0.1. Okay, so 0.1 round figure, 0.1, which is equal to 89.65. So here your line will be at 89.65. Okay, so that's your stop loss, 2% of your daily ATR, 2% below this distal line. So in case of demand zone, you have to subtract it, this 2% value, to know your stop loss. In case of a supply zone, you have to add this value to your distal line. Okay, so that's your stop loss. Okay, now exit target I will teach you in the coming session, but let's suppose this is my target. Now what I'm showing you is how the risk is more and less in case of a proximal entry and a type 1 or type 2 entry. Okay, so here can you see this? Now the reward to risk is 3 if I'm taking an entry type 1. Okay, at 92.05. Okay, can you see over here? It's the reward to risk is 3. Now if I put an type 2 entry, so when I put a type 2 entry, I'll be putting my entry inside the zone, isn't it? So if I'm putting an entry type inside the zone, anywhere inside the zone, or let's say precisely 50% of the zone. So can you see, I was getting a 3:1 at 90.20, but if the same entry I put at 90, I'm getting a more than 5:1. So this is how your reward to risk is increased when we take an entry type 2, because we are taking a entry inside the zone over here. Okay, that's also given in my notes. When you are going for a daily and hourly income trade, you will be taking 2% of your daily ATR. When you are going for a weekly income trade and a monthly income trade, you will be looking for a 10% of your daily ATR at this value. For daily hourly income trade, 2% of your daily ATR. For monthly and weekly income trade, 10% of daily ATR. Not in daily Neha. In your weekly and monthly income trade, you will be taking 10% of your daily ATR. Not in your daily income trade. Daily and hourly income trade, you will be taking 2%. Okay. Now entry type 3. Let me just take this as over here. So when are you going to take an entry type 3 over here? Okay, I'll just take a screenshot of this. Setting target, I have not done anything. Right now it's 3:1. Just see that I'm expecting a 3:1 from this trade. Okay, that means I'm taking risk 60 paise, and in turn I'm trying to recover 1 rupees 80 paise from this. So 60, if I multiply 0.6 by 3, it becomes 1.8. Okay, I have not yet set the target. I've just set the target, our target for this trade as 3:1. Okay, now coming on, I'll just take a screenshot over here. Okay, so now let me draw something over here. It directly took out a screenshot in this. Let's suppose that this is how my arrival is taking place. Now the guys who are taking proximal entry will be filled over here. Okay. Now the guys who are taking proximal entry will be filled over here itself. And the guy who is taking a type 3 entry is waiting for this prices to close inside the zone. So type 1 entry is filled over here. Okay. Type 1 entry, the guy who is taking proximal entry is filled over here. So now if the price goes beyond this, he is stopped out. But the same guy who has not taken an entry, is waiting for a type 3 entry, is saved over here. Okay, is saved over here. Okay, is saved over here. Type 2 zonal entry. See now this is our how to take screenshot, guys. You can just Google it down. Print screen, press print screen. Okay, so that's your, let's suppose that this is your not type 3, sir. What is not type 3? Is a type 2 zonal entry. No, I did not get your question. What is your question? Entry 3, yes, it gives you a sense of security, but then you can miss your entries too. You can miss your entries too. Miss your entries too. Just remember that. Okay, so let's suppose I was over here. I'll draw a rectangle. So now the price is coming into this zone over here. Here you are taking a proximal entry. Okay, here it's a you're taking a, if somebody is taking a proximal entry, then he is filled over here. Okay, he is filled over here. Now the guy who is taking a confirmation entry is waiting for the candle to close inside the zone. So let's suppose the candle close inside the zone, then he is sure that now he will take an entry over here. But if the same candle doesn't close inside the zone, okay, it goes beyond over here. So the guy who has taken a proximal entry has been stopped out. But the guy who has not taken a proximal entry is waiting for a confirmation entry is saved over here. Okay, that's how it's a safer it's a safer bet, you can say, for confirmation entry. Now you decide what entry you want to take it. Okay, you want to take a type 3 entry, but the same could happen. The price might reverse. The price might reverse. Okay, the price might reverse from here itself. Okay, the price might reverse from here itself. That is, just hitting the proximal line, it could go up. Let me see. I'll fill this. I'll fill this. Okay, so it could go up from the proximal line itself. So the guys who are waiting for a type 2 entry might just not get an entry. Okay, the guys who are waiting for a confirmation entry might not get an entry over here. Okay. That's your choice. No, you're stopped out. That means you have been stopped out. There is a loss in your trade. Tejas. Okay. So Many a times. Many a times. Many a times. There is nothing like percentage. I put my entry type as entry type 1. That's how I go for my entry. Okay, so that is about your entry types. Done with entry types. Okay. Now I will tell you, Senthil Kumar, hold on for your targets, guys. You have to calculate it manually. Yeah. So now it's a tedious job to calculate it manually. So what you can do here is, for your stop loss, you can just double click this line. Okay, double click this line, and if you're taking a daily hourly income trade, okay, let's put this line over here. Okay, now I want to calculate the daily ATR. Double click on this. Double click on this. Put make stop loss value based on daily ATR. So now this is a daily income trade. So I'll put a 2% of daily ATR, not 10%. So 2% of daily ATR, press save. Yes. So it will automatically adjust itself to 2% of daily ATR. If this would have been a monthly or a weekly income trade, I will double click this 10% of daily ATR and press save. So it will automatically adjust the line to 10% of daily ATR. So you do not need to calculate every now and then for 2% and 10%. Okay. Rosario, you need, I think there will be an ATR tool, but le bhari. Okay. So there is no daily ATR tool in in TradingView. You have to use maybe the ATR value over there. Okay. Maybe you have to use the ATR value. So I'll tell you, the guys who have not got the daily ATR. Okay, what you can do is, from study, come here, go to this ATR tool. Okay, this daily ATR tool will be activated only if you have Ignite activated. Okay, so you go to the ATR. I'm now telling you how to calculate the daily ATR. If you have not got the ATR tool, go here, click ATR, press apply. Okay, now this is your daily ATR tool over here. Okay, so go to the daily chart now. Go to the daily chart and see the previous candle over here. Can you see the ATR value? Can you see this 4.53 on the previous candle? Can everybody see here the 4.53? So if you don't have the daily ATR tool, you have to do some hard work. You have to go to the daily chart, place your ATR over here, go to the previous candle, see the ATRR value over here, 4.53, and now you have to calculate 2% manually for this. So 4.5, the 10% will be around 0.45. Okay, so 1% will be 0.04. So 2% will be something around 0.09. Yeah, that's the value, right? That's the value. So you can just take it 0.10, 0.10. You have to look for the previous day's ATR. Clear? How to look for ATR? If you don't have the daily ATR tool, you have to come here and you have to calculate yourself. Then you cannot use that automatic calculation of stop loss to the stop loss line. Is this clear? Okay, so now what we will do is we'll take a break of 10 minutes. It's not the current market price, it's from your opening price where the stock has opened. Nothing, Manoj. not now. You have to go to the here to indicators. Here, go to average true range. Okay, average true range and do the same thing. What I've done. Go to the daily chart and see over here. What is the ATR? Or the ATR value NTPC now. Go to NTPC. NTPC Limited. Go to NTPC Limited. Go to daily chart and see the daily ATR over here. The last candle. Okay, it will show some difference. But that's not very, it's negligible. It was showing here that it was 4.53 in Trade Tiger. It's showing you 4.67. It's okay. Tejish, this is how you can plot your ATR on your trading view. Okay. So guys, let's take a break of 10 minutes, and when I come back, I will start with the exit price. Okay, so I've cleared all your doubts. How is the entry risk, more in type 1, more in type 2, all sort of things. So I think it should be clear now. Daily ATR is just a tool that we use in Trade Tiger. They are the same. Okay. Yeah, so we had marked demand zone on this. Now let's go and mark the supply zone over here on NTPC. Okay. Now there was a supply zone over here, but this has been tested. Okay, so now I need to go up and mark my supply zone. So yes, I go up with the price over here. Now I know for the matter of fact that I want a supply zone which is above this. Otherwise, this will be cutting through candles or it will be a tested zone. Now again, once I come here, I know that I need a supply zone above this. Yeah, this. Now comes here. Now there's a supply zone over here, a rally base and a drop. Now this is a base candle, but because of this gap down, this will be considered as a red leg candle. So this will be a rally base and a drop. So if I go to the right hand side and check, this is a fresh zone. Okay, so this is your supply zone and demand zone on your NTPC chart. Okay, on the 15-minute, it's a daily income trade. Okay, so that's it on NTPC. So let me just cover the 2 slides that we have left over here. So nothing, there is no relation with that, Ashu. Freshness 20 days back and 14 days, that's nothing, no relation with that. Okay, so let's come here and exit part. So this is a very important slide. Okay, when to consider an exit, because you might be knowing an entry. It's same like I told you the way that Alibaba Charlie showed, the guy entered into the cave but could not come out. So once you enter into the trade, it's it's necessary that you have your exits pre-planned. Okay, so make sure that consideration when planning to exit your trade, make sure you have a clear and planned target and loss in exit. So you have not either, Ashu, you have not understand freshness properly, or you have not understand what is daily ATR. Okay, there is no relation. 20 days back share may be down more than daily ATR. So it will be down now. It will be every day the stock will go up or down with that particular value of the daily ATR. So what is that relation? What is in relation with the 20 days back? I'm not getting that. Simple thing is that your daily ATR is of 14 days. Okay, it's a range, but your freshness has to be seen for current market price. Where is your fresh demand zone and where is your fresh supply zone? That has to be seen with respect to your current market price, not with your daily ATR or 14 days or something like that. No, daily ATR is just a tool to tell you that yes, for to use for a stop loss first of all, and ATR will tell you the average price movement of the stock in a day. That whether it will. Now one thing that you can use over here is, let's suppose, let me clear this. Okay, please excuse me for this. So let me see that. Let's suppose that the closing price is, here is 94.0, 94.0, and my daily, the demand zone here is at 90.5. So it's within the daily ATR rule. So I can get an entry into this. Now if I mark beyond this, then the demand zone somewhere over here, so there is very high chance, or there is logic that I will not get entry into this demand zone at 82, because the daily ATR, the average price movement is only 4.5 rupees. So you will not get an entry. So you can mark your demand zone within the daily ATR range. This is just the default value 40. Okay, so that you can use it to your advantage, nothing else. So make sure you have a clear and planned target and stop loss exit. Make sure your target represent at least 3:1 reward to risk ratio. Now 3:1 reward to risk ratio is, I am risking 1 rupees, but I am trying to get 3 rupees from that. Okay, I am risking 1 rupees, but I am trying to make 3 rupees from that. So that's your target. At least it should present 3:1. So at least if it presents 3:1, it might give you 2.5:1. But if your reward to risk is only presenting, if your reward to risk is 1:1, it might not give you 1:1 also. So that's not a wise choice. So exit before the competitive buying and selling begins, just before opposing some supply and demand zone. So this is what I'm going to teach you right now. Okay, exit before the competitive buying and selling begins, just before opposing supply and demand levels. Manage the trade by only moving the stop loss protective order in the direction of profitability. So this is your trailing stop loss. The fourth point is a trailing stop loss, which I'm going to explain you in the bracket order session. Okay. Yes, there could be at a particular price. At a particular price, it may be. Yes, you're right, Amit. You're very right on that. Because if it goes, if your demand zone is 107, it might not come on the same day or what you're looking for. Okay. Now, my question to you is, now on NTPC, there is a demand zone over here. Okay, there is a demand zone over here. There is a demand zone over here. Now, if price comes, hits this demand zone, where could the price go to? If the price starts to bounce from this demand zone, if the price bounds from this demand zone, where could the demand zone go to? Or where could the price go to? Listen to my question very carefully. My price, let's forget the ATR level now. Okay, let's suppose I am looking for the trade to carry up for the next day. Okay, the next day I'm looking to carry this trade. Example, I'm looking for the next day to carry this trade. So where could the prices go to? Very good, Raghu. Very good. That, yeah, it will go to the next supply zone. Okay. Now I'm looking as per today. As per today, I'm looking at a supply zone. As per today, I'm looking at supply zone. So as per yesterday, this was a supply zone. So if the price comes and hit, it would have been hit yesterday, then this could have been your target. So this is your opposing level of supply. This is your opposing level of supply as per yesterday. Now we have a new supply zone formed, which is over here, a rally base and a drop. Okay. So your target could be this. This is your opposing level of supply. That is your target. Okay. So is your target representing 3:1? It's representing more than 6:1 over here. Can you see this 6.69? That means the reward to risk on this trade, if I get an entry now, is 6.7. So this is what this point is stressing on. Make sure your target represent at least a 3:1 reward to risk ratio. So if it's representing 6:1, at least we will get a 3:1. At least we will get a 2:1. Supply has come 3 times earlier. That supply has come three times earlier. This is what is the meaning of 3 times earlier? Three is to one is your reward to risk. If you are calling it 1:3, then it will be risk to reward. Risk is 1, reward is 3. So as we are telling it reward to risk, we will go 3. We will tell 3:1 because reward is 3 and risk is 1. Please be quick, guys. Please be quick. Please be quick if you have any questions, because if you have any question, please type in and then ask me, because we are short on time right now. Yes, Prasad. The first thing after entry you will do is put your stop loss. Basing candle. But what is the Harish? Harish, what is the relation with basing candle here? You have to put it 2% or 10%. Once you put 2% or 10%, then it will automatically calculate. It will bring the stop loss line to the particular value, Alan. But first you have to put your stop loss and then double click on this stop loss line, and then you have to set it whether it's a daily income trade or your monthly income trade or weekly income trade, or see, for daily and hourly income trade it will be 2% of daily ADR, and for your weekly income trade it will be 10% of your daily ADR. Yes, you are right, Rohit. Higher range. So either daily ADR is just the average to range of the stock. Okay, average to range of the stock, what it can move in a day. Why will I set the above the calculated daily ADR? Why will I set this stop loss line above the daily? You go double click this, make stop loss line, because this is a daily income trade. This will be 2% of daily ADR, and save. Yes, so this is a 2% of daily ADR. There is no share, there is no slides of daily ADR. There is no slide of daily ADR. Okay, I have mentioned in my notes, but you can see my notes. As in supplies and the price has come twice, we leave it. What if the new fresh supplies and price is also the same in chart? Does it make any difference? Price has come twice. Price has come once, then only we leave the zone. See, that is why I have not considered this as my supply zone. The price has come here once, so I've just left this supply zone. because the price is tested over here. Supply zone, the stop loss will be the same, 2% of daily ATR. First understand this, Kavita. Okay, so now if the reward to risk is too much high, you cannot carry on till this level. You don't have the patience to carry on till this level of opposing level of supply zones. So what you can do is you can just put an hard target. What is your hard target? Hard target for your hourly daily income trade is 2:1. So it will be somewhere over here, 2:1. Okay, and for a monthly income trade is 3:1. So once I get an entry, if the price bounces from this zone, then I will cover it over here at a 2:1. Yes, Ashu. Okay, so we will cover at a 2:1. Okay, we will cover at a 2:1. So this is your hard target. 2:1 is your hard target or mechanical target for your hourly and daily income trades, and for your monthly and weekly income trades, 3:1 is your mechanical target. Though you can cover at a 2:1 also. Your monthly income trade and weekly income trade can also be covered at a 2:1. Okay, so this is your target. Now let's come here in the slide. Now consideration planning to exit to your trade. Now there is a supply zone over here, a beautiful supply zone, and let's suppose that we wanted to short in this supply zone. Okay, we wanted to short in a supply zone. Okay, now just concentrate here. I'll just note back. Okay, just see till here. There is only one Bhushan. I have only passed on one note. Okay, there is no second note. There is only one note for the whole curriculum. So that only notes that is the only notes that we'll get. Okay, no other notes. So now let's suppose that I wanted to short in this supply zone. Okay, now can you see this is the opposing level of demand? If the price comes to hits this supply zone, this is where the price would come to the next demand level, because the price will come down hitting a supply zone. So this is your opposing level of demand. Okay, this is your opposing level of demand. But when the price is giving a pullback to the supply zone, or when the price is giving a pullback or a retracement to the supply zone, can you see there is a new demand zone that has been created over here, a drop based rally? Can everybody see this? Can everybody see this? So now in this case, my first target was over here. But now as the new demand zone has been created over here, what could happen to the price if the price hits this supply zone? It might come down and it may turn from this newly created demand zone. Okay, and if the price hits the supply zone, comes down, hits this demand zone and starts to move up, what will happen to the profitability, guys? Okay, what will happen to the profitability? At some moment of time you are making 5,000 over here. Now once the price it is hitting this demand zone and going up, there is a probability, or it's a sure shot thing that your profitability will reduce, right? At some moment of time you are making 5,000, but once the price hits this demand zone and starts to move up, you will reduce your profitability. So isn't it good to cover something over here? Or you can have a modified target from this level to this level. So that is what the slice is talking about. See, this is your stop, Kavita. Your stop loss will go, if this is a daily and hourly income trade, it will go 2% of daily ATR above this distal line. Okay, so this is my stop loss. This was my entry at the proximal line. This is my supply, and stop goes slightly beyond the entry zone. So what is that value? It will be 2% of daily ATR. So what you need to do is you need to just add the 2% or 10% of daily ATR to this line. Okay, now this was the stop. Now this was my initial obvious target. This was my initial obvious target before this happened. Before this happened. Before this happened. We are not talking about trailing targets. Now just concentrate, Chakrapani, what I'm telling you, because you will confuse everybody. Okay? Nothing right now. I don't want to do any trailing targets. Trailing is something different. So now there is a new demand zone that is formed. So this was your initial obvious target. Now there is a new demand zone. While the price was retracing back into this supply zone, there was a new demand zone formed over here. Okay, there was a new demand zone which was formed over here. Now, instead of having this as my target, I can either modify this as my target, or I can have two targets, one over here and the second over here. So now this is your more conservative target, because what could happen is the price might hit the supply zone, it might come down, and instead of going down to this demand zone, it might turn from this demand zone itself. Yeah, you can modify the target, or you can have two targets. Okay, you can cover something over here and you can cover something over here, because what will happen when you cover something over here is that you will get a feeling of satisfaction that yes, I have covered something over here. When the stock was going down, I have covered something. So at least I have not earned losses. What could happen from here is that it might hit this demand zone and it might go to the supply zone and it might hit stop loss. So at some moment of time, you are making 5,000 over here. But that 5,000 that you are making because of this demand zone, the bounce from this demand zone has reduced you to a penniless trader. Okay, the profit that you are making, you have given all back to the markets. So it's obvious that now you could either modify the target, or what you could do is you could cover something over here and keep something for you. Two possibilities over here. The price hit the supply zone, coming here and reversing from this and going and hitting a stop loss, or it could happen is if the target over here again go to the supply and then again might just react from the supply and it come to the second target. Okay, so if you cover something over here, you will be in a win-win situation. But if you don't cover something over here at the opposing level of demand, then it might happen that at one moment of time you are making a good profit, but now you have ended in stop loss. And this has happened with me. In the beginning. Two demand targets, but one stop loss. Stop loss, the trade is the same. You're not entering two trades over here. Okay, when the price hits the zone, it's not that again if the price comes here from this demand zone, again you're entering. No, you are into the same trade, but your targets are two. You can plan mechanically targets. Okay, you can plan mechanically 2:1. But always remember, Ashu, that your target, if let's suppose that I have an opposing level of demand very close to the supply zone, which is not giving me a 2:1 also, then I will skip that trade because it's not offering me 2:1. So why will I go for it? If the price, if the opposing level of demand or supply is not offering me at least a 2:1, why will I go for it? Okay, so that you have to keep in mind. Yeah, it's possible to keep two targets. Okay, once we do, Prasad, the bracket orders, you'll come to know that. This, the opposing level of demand, this is the second target value. This one, this is your first target value. Because this was the first target. This was the initial obvious target, Rajiv. Okay, this was the initial obvious target. But once the price was returning to the supply zone here, we have formed a new demand zone over here. So that's why we are shifting the target, or we are having two targets. So targets are set slightly before the opposing zones. So targets are set slightly before the opposing zones. Targets are set slightly before the opposing zones. So whenever you put your target, just put your target. If you see, this is the proximal line, we have kept the target above the proximal line. Here this was the proximal line, we have kept the target above the proximal line. Yeah, you can do that, Prasad. If we have 100 shares, so we can sell 58 for target. Yes, that is exactly what you can do. So this was going to cover. I was going to ask you the same question, that how will you split the trade. So if you have 100 quantities, you can book 50 over here. You can book the next 50 over here. So if you book your first 50 over here, let's suppose the prices hit this entry at the supply zone. This 50 quantities that you have put is covered over here. Okay, now even if the price comes here and hits the supply zone, so the rest 50 will get you stopped out, but at least you have earned something over here for the 50 stocks that were profit at this target. Yes, this can happen for a long trade also. This can happen for a long trade also, Rohit. Yeah, so that's it for the session. So let me just tell you the homework. What was the homework? So we have done one homework over here, NTPC, Tata Motors. Okay, let's go with Tata Motors. Tata Motors chart. So I told you to analyze the trend on the 75-minute chart, right? So again, the trend is up, right? The trend is up. And if I'm analyzing the trend on the 75-minute chart, what type of trade I'm trying to go for? It's the daily income trade. It's the daily income trade. Okay. So I'll go to a daily chart. No, I'll go to a 15-minute chart, in fact. Madhuri, that's what I told you, that there in your free subscription for trading with the 75-minute chart, you cannot customize your time frame. You can just use the time frames that the trading view is giving you. But if you go for a paid subscription, you can modify your time frames, okay, or you can customize your time frame. So this was the scenario yesterday. Okay. So let's go with this. This was the scenario yesterday. So I'll start with current market price, look left and down until I find origin of a strong rally in the price. Okay, so is this a strong rally in the price? A gap up over here? Yes. Base, 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 base. That's a leg candle. That's a leg candle. So here, this is your demand zone. Is it fresh? Yes, it's a fresh zone. So that's your demand zone. And let's look at the supply. So I'll go here, but the zones needs to be marked in the lower time frame, which is 15 minutes. Yeah, that's what I'm marking, Chakrapani, in 15 minutes only. I'm marking my zone in the 15 minutes only. So now I need to go up to find my supply zone. Now I have got it that I need a supply zone above this. So now there's a fall. There's a sharp fall over here. This is your basing candle. This is your rally. Okay. This is your rally. Thank you, Rohit. I forgot the odds and answers to score. Okay. This will be rally. This will be a rally based drop. 81. How can the supply zone exist at 81 if the price closed yesterday at 83.20? How can you sell cheap? This is not very explosive. You can mark your picture of demand. This one you're talking about, is this? Yeah, this might be a. No, this is not a demand zone. This is not a demand zone. This is a tested demand. Okay, so rally base and your drop. So this is your reversal pattern. We have to consider the leg in rally base drop. So what will be the odds and answer score for this supply zone? Why will it be 6, Shilpi? And those who are saying 6, why will it be? Where are we losing 1 point? Where are we losing 1 point? Demand zone will be 6. 3 for freshness, 2 for the strength because the price has left the zone with a gap, and 2 for your time spent on the base because there is only one basing candle. So if this is 7, what type of entry we will be taking? Type 1 or proximal entry. So proximal or T1. Okay. Now here the score is rally base rally. Okay. What will the score of this zone? 6. Yes, we are losing 1 point on the time spent on the base. So 3 plus 2 plus 1. Okay. So the score will be 6 over here. And what will the entry type we are taking over here? Type 2 or type 3, not type 1. Type 2 or T2 or T3 entry. That is zonal or confirmation entry. Yeah, you can draw wick to wick one. Okay, now somebody was telling me how to put your stop loss in case of what is the score, Bhushan, of the odds and answer? What is your odds and answer score? 6. So what type of entry do we take when the odds and answer score is 6? Let him answer. So we have an answer. So when the odds and answer score is 7, we are going to take a type 1 entry or a proximal entry. When the odds and answer score is 6, you can take either type 2 or type 3 entry, whatever you suits you. Okay, so Kavita, this is for you. You wanted to know proximal, the stop loss placement for this. So this is your daily income trade, right? This is your daily income trade. Now you double click on this line. Okay, double click on this line. Just click on make stop loss value based on daily ATR. Now, as this is a daily income trade, you will select 2% and not 10%. 2% of daily ATR. Press save. Yes, it will automatically itself to the desired value. Okay. Now remember that you cannot draw daily ATR on TradingView. I have just told how to go with ATR. There is no daily ATR tool on TradingView. There is ATR tool. So you can just ATR tool, you can use that. So for in this case, the target will be this only, this demand zone, because this is the fresh demand zone that we have. This is the only fresh demand zone that we you go here to indicators, go here and use this ATR, average true range tool. Okay. And remember that you have to look your ATR value on the daily chart. This is your daily chart. This is your daily chart. So you look at the previous candle's ATR. You look at the previous candle's ATR. Okay. You look at the previous candle's ATR. Not this candle, because this candle is right now, it's not yet formed over here. Okay, it's not yet formed over here. So you look at previous candle's value that is already completed. You can look at this value after the closure of the price today at 3:30. Okay. Yeah. How entry and stop loss is set mechanically, which line do we have to click to open window for 2% setting? Entry cannot be set mechanically. Entry you have to select at what price you want to select. Stop loss, you select this from the stop loss line, set it anywhere, and then double click on the stop loss line. Double click on the stop loss line, go here, click on this, as you are a daily income trader here, this is a daily income trade, select 2%. If this would have been a weekly or monthly income trade, this would have been 10% of daily ADR. Okay, so 2% of daily ATR, select, press save. Yes, it's done. Tomorrow you'll understand. So demand valid on the left, we have more base candles. Yeah, it's valid. It's valid. Daily ATR is related to the stock. This is for your stock, not for Nifty. How can it be? How can this be for Nifty? You can take, but the time frame will differ. Time frame will differ, Prashu. For a daily income trade, you might find, let's suppose over here the trade, but for monthly income trade, you might find some trade over here. Then you have to wait it. The daily ATR, see, daily ATR will vary 10-20 paise. Now come here. Where is trading view? The daily ATR for this is 4.67. This was 478. Okay, so not much of a difference. This is 4.87. Some point value will be different, but it will not happen from 4.67, it will go to 3.67 in a day. Okay, so let me search for the work. Tomorrow be prepared, guys. Tomorrow it's a make or break.